Ladies and gentlemen, welcome back to the channel. We have a ton of information to get into, some big breaking news today on Tesla stock from Elon Musk. I'm excited, if you can't tell. Hit the like button, subscribe to the channel, check out the link down below in the description of this video if you want to come see the latest stock that we have just identified as potentially under the radar kind of valuation arbitrage, if you will. This company is trading at a fraction, a fraction of the valuation of your well-known high-flying AI stocks today. It's profitable. It's growing at like 40% year over year. It's crazy. Some of the opportunities we uncover are ridiculous. Check it out if you would like to read the disclaimers. I'm not a financial advisor, blah, 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 blah. You get the idea. Don't be a jackass. With that said, that is the sponsor of this video. Let's get into today's episode and discuss what's going on with Tesla stock. Tesla is up 1.64% today, which is notable because the IWM, the Russell 2000, down 0.57% today. So Tesla is a clear winner. The NASDAQ is up 0.56%. S&P is up 0.36%. But risk on taking a little bit of a chill day today. Let's just put it that way. Okay, on betting markets like Kalshi, there is a 98% chance that Tesla shareholders approve the pay package. Elon Musk says this shareholder vote decides the future of Tesla and may affect the future of the world. Elon says, let us know if you have any difficulty voting. Elon Musk confirms that car accidents can be cut in half thanks to Tesla's robotaxis. This is some of the massive news today. Bard analyst Ben Callow has increased his Tesla price target by 71%. Let's fucking go, baby. That's what we're talking about. Wall Street starting to understand. To $548 per share. Keep in mind, this is a 12-month price target, so they think at some point between now and the next 12 months, Tesla stock will be $548 per share. Their previous price target, get this, $320 per share. This is now the highest Tesla stock price target on Wall Street. Bard also upgraded Tesla to outperform from neutral. A $548 stock would make Tesla a $1.82 trillion company. Again, just to put that into context, the compensation package sets Tesla at an $8.5 trillion company to hit that max tier, and obviously the operational milestones that will come along with that. So this today is like, whenever you get these kind of price targets from other well-respected firms and analysts, it makes all of Wall Street kind of reconsider, like, what am I missing? Should I raise my target? That's kind of what you're getting today. And it is prompting, I believe, more institutional buying. That has been a trend we've seen in Tesla stock ever since Tesla's last earnings. And now that Tesla has broken out and is holding above that 420 level, I think it's really only a matter of time before we get that next leg higher and the run to new all-time highs. Which I said in the last video, Tesla could be well over $500 per share by the end of this year. I'm expecting a very strong rally in October, November, and December. This rally could take us into the 600s. If you want my, again, honest opinion. Now, Tesla is rolling out a small but smart software tweak to Summon Standby, designed to intelligently conserve your vehicle's battery life when the feature is least likely to be used. German union is mad at Tesla over health bars and Giga Berlin socks. The union argued that red Tesla socks with a Giga logo, which were distributed to all employees last year, were inadequate. They also are mad that the health bars that were given were wrapped in blue packaging instead of red, because IG Metal is known as the red group in the Works Council. So again, just trying to harass Tesla, like, for no reason. And in big news today, Nvidia is considering a $500 million investment in UK self-driving startup Wayne. Here's a video of a Wayne vehicle that uses 7 cameras, no radar, no LiDAR, no HD maps, and no labeling. All an end-to-end AI-enabled foundation model. Wave currently operates in Britain and the US and has been expanding testing and development to wider markets like Japan and Germany. So basically a mini Tesla equivalent. This is massive news today as well for specifically Tesla. Tesla is working on accessibility rides as part of robotaxi expansion. Tesla's robotaxi service in Austin is signaling a major step towards inclusivity with a new accessibility section in the mobile app. While the app directs users to 2 alternative services, Cat Metro Access and Lone Star Medical Transportation, Tesla says they are working on their own wheelchair accessible vehicle solution. Elon says that Tesla is making it easier to clean underneath the front camera glass on vehicles. Here's why Bard today says they raised their price target 71%, again, to $548 per share. Quote, "We underestimate the look-through in the core automotive business, or we underestimated the look-through in the core automotive business. We now expect shares to outperform as Tesla is increasingly viewed as the leader in physical AI." Guys, we've been early to this the whole time. I remember making videos in 2024 saying, Tesla's ChatGPT moment is coming, right? Tesla's moment where Wall Street says, wow, this is a leader in real world AI because of robotaxi, because of Optimus. This was long before the robotaxi network was ever even had like a start date assigned to it, okay? And now you're starting to see Wall Street like say, hey, oh my gosh, Tesla is going to be a leader in real world AI. ChatGPT, Grok, all of that stuff is cool. What you can do with coding and on the internet and all of that. I think over time, like you're going to have some Jetsons type shit where your watch will bring up like a 3D projection and you can do all kinds of cool stuff. Like AI is going to dominate the world. But real world AI is the real world application of these technologies, okay? Getting people using them like robotaxi and Optimus. There is no bigger AI projects than those at this point. I think healthcare, is going to be really dramatically benefited from AI. Like crazy to think if you're in your 20s, 30s, or 40s, you may live to be 120. Right? AI is going to do a lot of cool things, okay? Life expectancy, blah, blah, blah. I think healthcare is probably going to be the biggest thing to be changed, benefited from AI. But that's down the line a bit. We will not miss that when it happens. Come join the trading community if you want to be a part of all of this. I know I'm early to a lot of things. We were talking about Tesla as a real-world AI winner back in 2024. Here's the point. Wall Street is starting to figure this out. Wall Street moves stocks, okay? Retail does not move a stock. Yeah, sure, in minor instances and for minor moments. But if you want Tesla to double, triple, 10x, it's Wall Street coming around to this. And Bard may be, a catalyst to get more and more Wall Street folks to come around to Tesla's leadership in physical AI. They go on to say, additionally, the road ahead is chock full of catalysts. Beyond the typical Tesla news flow, we see several events ahead which could move the stock, including the next generation of Optimus reveal, announcing additional bots, entering new markets for robotaxi service, shareholder approval of Musk's pay package, launch of the Tesla Semi, rollout of more affordable vehicles, expanding the use of Dojo externally, and energy business growth. Lastly, Musk's share purchase is a positive sign. Musk recently bought shares for $1 billion, which we see as a positive indicator looking ahead. I think this is the start of the ChatGPT moment for Tesla's dominance in real world AI. We've known this was coming for a while. We know this. That doesn't matter. You need Wall Street to know this. That's where the gains are really going to come from, because you have to understand this. Okay, you have to understand how Wall Street operates, okay? Wall Street, all they care about is beating the S&P. Unless you're like Renaissance, which is a closed off fund, only employees invest in that, and they really try to, grow their money, right? That fund has like an average return of like 70%, okay? Most funds that take in retirements weekly or, certain allocations from people's paychecks, they're just trying to beat the S&P or match the S&P. That's all they care about, not underperforming. So what happens is when you hear overweight, underweight, neutral weight, it's important you understand this. They mean in relation to the S&P, okay? So if Tesla is 5% of the S&P, if a fund says they are underweight Tesla, that means they likely still own Tesla. But if the S&P's allocation is 5%, maybe they're only 2% invested in Tesla. Okay, that's where a lot of funds are, like 2-3% invested in Tesla, something like that, 4%. Now, just getting back to a market weighting, like the S&P 5%, getting a funds portfolio 5% in Tesla, that is a lot of buying pressure, let alone if people start to overweight Tesla. So what they'll do is they'll go out and if, for simple math's sake, say Google's 5% of the S&P, Tesla's 5% of the S&P. If they want to be overweight Google and underweight Tesla, they might go out and put 7% of their portfolio in Google and only put 3% of their portfolio in Tesla. Well, in simpler terms, what you're going to see happen is likely selling in your other names, like to get back to a market weight in Tesla, market weight in Google. They're going to sell some Google, put that into Tesla. I think that is what you've started to see more and more recently. And as time goes on, I do believe that is going to start to show. Bard also says that if Tesla and Elon Musk can achieve all the operational milestones in his newly proposed pay package, Tesla's market cap could hit upwards of $12 trillion or $3,000 plus per share, which, is about a 10x from where Tesla recently was, and more than a 10x for most of you guys with average cost of your shares like well below $300 a share. Elon Musk says the algorithm will be purely AI by November with significant progress along the way. He is referencing the X algorithm. Elon Musk's AI company XAI has reportedly raised $10 billion at a post-money valuation of $200 billion, according to CNBC's David Faber. Again, this is going to be more important for Tesla, as Tesla will be taking a stake in XAI as long as shareholders approve that, which it looks like they will. So the valuation of XAI is going to be more and more important as time goes on. In option activity today in Tesla stock from hedge funds and institutions. Keep in mind, this is only the interesting flow sentiment. These are large trades above $100,000 typically, can be maybe short-term kind of interesting flows, okay? You have 290 different trades that are flagged here for $326 million with a positive order value of 88%. Yesterday, you had 514 different trades totaling $836.7 million with a positive order value of 88%. And over the past week, you've had 2,951 different trades totaling $3.74 billion with a positive order value of 86%. So yeah, again, hedge funds and institutions have grown pretty bullish in Tesla in a short amount of time. Short interest of free float at 2.85%, $33.4 billion sold short in Tesla, totaling 80.13 million shares. And here on the day today, you have 369,000 shares that are being sold short. Again, keep in mind, this is the worst 10-day period we are now in, at least for the next 8 trading days, historically for any given year. So from September 17th through the end of September, it's really bad seasonally speaking. The fact that we're not like seeing a lot of that seasonal weakness, I think shows just how prime this market is for a rally. I also think that, we have so many bears out there in our markets. We'll look at that in just a second, that you're just likely not going to get that seasonal like correction or seasonal, large downside because there's too many bears, right? When people are already bearish, they're already not positioned or, short this market or blah, blah, blah. You need a lot of bulls in order to get, that flip and for markets to fall. And you just don't have a lot of bulls right now. You have a lot of bears. I guess the bulls have grown, but the bears have also grown. Like, it's not skewed enough where everyone is bullish, where you can get these downside surprises. Unless something happens with trade, geopolitical, something needs to happen essentially to get significant downside from here. And if that doesn't happen, we're going to leave this seasonal weakness period. People are going to get into the holiday, kind of mentality and start looking ahead towards 2026. That is looking very good at this point. In broader market news today, Estonia's prime minister says Estonia has decided to request NATO Article 4 consultations over Russian jets entering its airspace. Now, a stopgap spending bill to avert a government shutdown falls short in the U.S. Senate today. Betting markets like Kalshi are assigning a 56% chance of a government shutdown, which will start on October 1st if there is not a raise to the debt ceiling to get the government funded. Okay, here's the deal. Government shutdowns normally are not negative for stocks. Normally stocks do just fine. It's less spending, right? You could see why stocks really wouldn't care. Okay, but it does mean like the military wouldn't be paid, postal workers wouldn't be paid, certain other areas like parks would be shut down, national parks, and when the economy is, or Wall Street views the economy as on shaky footing, a government shutdown is not a great thing. Now, as we get closer to October 1st, we're going to be in the final days of seasonal weakness for September, and you could see a government shutdown starting to add a little bit more uncertainty to markets, which could be a catalyst for a shorter term sell-off. But at this point, there's still, a week and a half left to get something done. So stocks aren't going to preemptively, freak out over that. Senate Republican leader Thune says the Senate will take another vote on the House-passed stopgap funding bill at some point, but not today. 13 counterparties take $11.363 billion at the Fed reverse repo operation. This is something we've talked about for a while now, but as this money really winds down, you're going to see the Fed that has to stop running off their balance sheet, okay? This reverse repo operation is really excess money in the banking system. So how it works is if you're a bank, you can't sit on, call it $100 billion of cash. You just can't do that. Now, if you're a bank, you can do two things with customer deposits. You can give loans and you can buy treasuries. Okay, that's the only two things. You can't go out and buy stocks with people's savings money. Okay, you just can't do that. It's illegal. Okay, so you can do two things: lend money and buy treasuries. Well, these are treasuries. Now, the reason the bank cannot hold $100 billion, let's say, is because inflation, okay, is always around, right? So if you have $100 billion of money sitting there and inflation is 0.0, let's call it 2% a year, or let's use 3% a year because that's more like logical for these days. That's $3 billion you're going to lose in purchasing power. Divide that by 365 days. That means every day that money would lose at least, 8.3 million every day if you just let that money sit there. So the Fed sets up the reverse repo operation, or they did a long time ago, so banks can park their money there, get a small fee, basically pay for the deposit sitting there. Okay, so banks don't have to rush and give out all these crazy loans and blah blah blah. Hopefully you understand this. Well, if the banking system starts to run low on money, this becomes a real issue, right? As the Fed is trying to sell these assets off their balance sheet to banks, if banks start to not eat up that extra money, which this is the lowest reverse repo operation number we've seen in years, that starts to, weigh on the Fed. They have to stop running off their balance sheet. So we're going to watch this because honestly, at the next Fed meeting, you're probably going to see the Fed winding down their balance sheet operations or slowing them down quite a bit, which is historically even more positive for stocks than even rate cuts. German foreign minister says, by intercepting Russian planes immediately, we are showing NATO is always ready to defend itself. The Trump administration considers raising the retirement age to save Social Security from insolvency, per Fox. I mean, guys, that is why you do what you do. See, you don't have to rely on, Social Security, right? You're inevitably going to be able to retire far younger than the Social Security, requirements. And for that, I give you a nod, man. You are doing the right thing at the right time. If your family doesn't appreciate that, well, let me just tell you, they're proud of you, or they will be at some point. And I know just those words alone can mean a lot to some people. ByteDance to allow TikTok to continue serving U.S. users. Iran's UN envoy, after a UN vote, says the door to diplomacy is not closed. India's Trade Minister Goyal likely to visit the U.S. soon for trade talks. Donald Trump wrote on X, True Social, he says, I just completed a very productive call with President Xi of China. We made progress on many very important issues, including trade. Wow, that's huge. Fentanyl, the need to bring the war between Russia and Ukraine to an end, and the approval of the TikTok deal. I also agreed with President Xi that we would meet at the APEC summit in South Korea, that I would go to China in the early part of next year, and that President Xi would likewise come to the United States at an appropriate time. The call was a very good one. We will be speaking again by phone, appreciate the TikTok approval, and both look forward to meeting at APEC. Wow. That is not just good for stocks, but that is good for the world, to have a cordial relationship with China. It also really promotes healthy AI competition. We are in an AI race with China, okay? From a military front, from a healthcare front, from a technology front, from a device perspective, a chips perspective. The Cold War with China propelled technologies decades ahead of where they would have been, right? Without the Cold War with Russia, we wouldn't have what we have today. It forced aggressive innovation and competition. And this, AI race with China, as long as there's not a military aspect to it, will be, for at least the next decade or two, a big positive for both countries, right? For China and the US, for the development of civilization. So to see them really get along, not to mention trade, fentanyl, some of these things here, is really good. I do think at some point the fentanyl tariffs will be dropped on China. I think with a potential TikTok deal, some of the tariff rates are likely to come down. And I think that is an upside catalyst for the next couple of months. What do you think happens when Trump comes out and says they're dropping the fentanyl tariff, that tariffs are going to fall 20% on China? It's going to be a very positive catalyst for stocks. Fed Moran, the recently confirmed Fed appointee that Trump appointed, says, I'm clearly in the minority in not being concerned about inflation from tariffs. Fed Moran says getting to the neutral rate half point at a time is reasonable. He says, I don't think a 50 basis point cut would worry markets too much. It's a measured pace. And Fed Moran says the longer we stay restrictive, the greater the risks to the job market. Trump will appear for an interview on Fox News on Sunday, which, I wouldn't be surprised if there's some kind of news from this call between Trump and Xi actually shared with us. That'd be a good way to start next week's trading week. And Moran says, I think growth will be better in the second half of this year, in which Atlanta Fed GDP Now tracker is at 3.3% for Q3 GDP. This could obviously change, right? But some of the big, data sets that really tell you a lot about the economy, you could see, it's not here anymore, okay? But private domestic investment growth and personal consumption expenditures growth is very positive. I don't know why it's not coming up right now, but very healthy levels of investment currently taking place. Maybe I can find it. Doesn't really matter. I've talked about it recently on this channel. You're positive like 6+% for real domestic investment growth, and you're positive over 2% for real consumer expenditures growth, which shows economy's really doing fine. Now, again, just to reference the point I made earlier, you have so many bears right now on markets. It's going to be hard to get a seasonal correction or sell-off in September. Bullish investors sit at 41.7%, neutral investors at 16%, and bearish investors at 42.4%. So really neutral is just falling. Bullish investors did rise a lot from last week, and bearish investors fell a little bit, but you are still like 11%, a little bit 11.5% higher than the historical average for bears. So like there's a lot of bears out there. Bulls have recently grown, but when you have this many bears in markets, even at new all-time highs, it's very hard to get that correction, okay? Now, the CNN Fear and Greed Index as of today is coming in at a whopping 62. You're not even halfway through greed, okay? Market momentum is greed, stock price strength, extreme greed, stock price breadth is neutral, put and call options, extreme greed, market volatility is neutral, safe haven demand is neutral, and junk bond demand is currently in fear. And if we take a look at the percent of stocks trading above their 50-day moving average, holding pretty steady as of recently at 63.2%, down about 2.5% today, but if the midpoint is about 50 to 55, like that's an average over the last 5 years or so, you're a little bit on the higher side. So markets internally look healthy. Tesla stock at the time of recording this video is at about $425 per share, up 1.94%. Ladies and gentlemen, let me know your thoughts on this down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Have a great rest of your day. Have a great weekend. And I will see you in the next one.